I think there are at least two, maybe three things that need to know about central bank gold purchases. The first is that countries around the world are becoming weary of and afraid of the interference by the US government in their own internal affairs and the weaponizing of the dollar, the weaponizing of the world's reserve currency, and the attempt by the United States to freeze their political enemies out of the SWIFT banking system, which is allegedly an international rather than a US institution. There are countries that have policies that they believe are in their interest, and they believe that the US attempt to suppress those policies are not in their interest. And the idea that their economy, their method of transaction, should be denominated in the currency of their enemy is not attractive to them. Individual investors, too, I think, need to decide, particularly Americans, if the increasingly intrusive role of the US government in their own private affairs isn't at least somewhat distressing. The idea in your country that political opponents of your prime minister could have their accounts frozen, were they at least denominated in Canadian dollars and in Canadian savings institutions, should lead investors to have the same fear of their own government that foreign investors have of the US government. The second is that I think that central banks around the world are aware of the precarious nature of their own nation's finances. The Bank of Japan, as an example, with extraordinarily high levels of domestic debt and historically high deficits. If you don't trust your own finances, you certainly trust your neighbor's finances less because you know less about them. And I think one of the things that you're seeing in terms of central bank purchases of gold is that they are less inclined to purchase sovereign bond issues of other countries simply because they're concerned about the precarious nature of their finances. Let's say that you are Premier Xi of China. Imagine yourself looking at the United States and having conflict with the United States in various aspects. You don't trust them. You also don't want to finance them. You don't want to give them the benefit of seniorage. But in particular, you don't want to be paid 4% on your savings in a currency that's depreciating by 8% a year. The idea that you are subsidizing somebody who is at least in some measure your enemy, and also somebody who is exhibiting increasing credit deterioration, makes the actions of central banks in buying gold very easy to understand. What I would ask individual investors to do is apply the same methodology. Are you afraid of your own government? Do you think that your own government is spending your money wisely? Are you afraid of intrusions by your government into your own affairs? And do you think that your government compensates you adequately for the risk that you're taking in lending them money? If the answers to those questions are no, then perhaps you need to take into account the actions of the central bank and employ them on your own behalf.
When it comes to central banks and central bank interference, can you tell me how central bank digital currencies fit into that picture and what we should be keeping in mind when it comes to that?
Well, central bank digital currencies, to me, are incredibly scary. The idea that they could issue an unlimited amount of currency units without regards to the market, which is to say they wouldn't have to borrow it, they could simply counterfeit, print. And scarier still, that they could cancel your currency units. If the government took objection to some action by Charlotte, perhaps she gave a campaign contribution to the wrong party, perhaps she backed a philanthropy that the government considered to be anti-Canadian, they wouldn't have to freeze her bank account. With the central bank digital currency, they could simply cancel her currency. When you combine that technology with the Chinese technology of social scoring, which is to say that the government looks at your actions and decides that they've been helpful or non-helpful and assigns you a social score, the combination of the technology around controlling the currency digitally and then ranking people according to the government's priority becomes, to me, a truly terrifying circumstance. I've even taken now to spending cash in circumstances where in the past I would have used credit cards, simply because I'm looking to increase the utilization of cash through society, because I'm afraid enough about the conjunction of central bank digital currency and social scoring that I would like in my own small way to make cash itself more useful to more people.
So this is going down a little bit of a scary path there. Usually you tell us, it's not all bad things will probably turn out okay. What do you think about this? Is this an inevitable path that we're going on right now?
No, I think it probably will turn out okay, but I think it's a contingency that's worth insuring against. I don't believe that society gets better because of government. I think that society gets better in spite of government. Wealth isn't created. Progress isn't created by government. Wealth and progress are created by individuals. And we still, in the United States and Canada, have a society that's diverse enough and creative enough that we generate so much individual wealth that we can afford our collective stupidity. And I believe that that's going to continue to be the case. But I'm beginning to insure against the odd circumstance where it might not be the case. Certainly, irrespective of whether you agree with the protesters' actions in Ottawa, the extra-legal response of the Trudeau government was, to me, absolutely terrifying. I'm used to being more afraid of my own government because they're closer to me than other governments. But I think what Mr. Trudeau did was express the will of big thinkers around the world. I think probably President Biden looked at Prime Minister Trudeau with some envy. And the fact that it was his attempt to deprive you of your freedom that inspired such envy from my president, that's not an attractive circumstance for me. I still believe that individually we have the tenacity and the brilliance to outthink the bastards. But just in case.
What are your thoughts on the path forward for the Fed?
I have to say I'm very impressed with the strength of the economy. I would have expected that the increases in interest rates that we've seen would have had more of an impact on the economy. The 30-year fixed mortgage rate, as an example, in the United States has more than doubled, and it has impacted real estate prices. My own expectation is that the impact of higher interest rates is likely a lagging indicator, which is to say that the impact of decreasing availability and affordability of credit will impact the economy at some point in time. But I do need to say that I'm impressed with the strength of the economy. I'm impressed with the ability of the Fed to raise interest rates. I'm impressed with the decreases in inflation that we have seen as a consequence of increased interest rates. And I need to say that so far, the policy has worked and worked on many levels. I don't approve of it because I don't think that the government should involve themselves in artificially manipulating interest rates. But I do need to say that I'm impressed with the resilience of the economy. I'm impressed with the market's seeming willingness to accommodate higher interest rates. And when I look at capital markets worldwide, but particularly in the United States and Canada, I am struck by the incredible amounts of cash on the sideline. If the Fed has the continued ability to raise interest rates without an immediate deleterious impact on the economy, I think that you may see, at least temporarily, a melt up as opposed to a melt down in capital markets, simply because there is so much cash on the sidelines. In circumstances like this, in the near term, many investors and every government confuses liquidity, the fact that we have cash, with solvency, the ability to maintain our balance sheet over the long term. We have lots of liquidity right now. It's our solvency that concerns me.